Hello everybody, my name is Mark and welcome to another video, weekly stock update here. And in this video I'm going to talk about how the market's been doing, but more importantly I am going to talk about my own money, how I am doing with my own investments. And again, if you look around on YouTube, I'm about the only person that I could find anyway, to my knowledge, that is doing videos like this where I am talking about my own money in my own account. This is not a paper trading account, this is my real money here. So without further ado, let's get started. Okay, so right here, let me go here. These are my positions right here, those and those down there. So all of those are my positions there. So we'll go in the upper left hand corner, you see BAC, that's Bank of America. I own 400 shares of Bank of America. Dollar cost average, I bought them at $22.93. And then if you go over two boxes, you say BAC put options. Those are 4 put options that I bought, and I spent $205 per contract. Actually, I think it was $203, but we'll say $205 per contract. Dropped a little bit in value, but if you go down to the left to the box BAC, the lower left corner, you see this box right here. And those are 4 call options that I shorted, and I shorted those at the $25 strike price level, so that if Bank of America goes up to $25 or higher, I will automatically sell my shares of Bank of America at $25 a share, which would be a very nice profit for me because my dollar cost average is $22.93, so I would make well over $202. That would be $207 a share plus the premium. I collected $42 in premium per contract, and those have dropped down to $33, let's say. So I'm up about $9 on those, and those are what helps to pay for my put options. It is a strategy that I use like a religion. It's called the protective caller strategy, where you invest in a stock that you like, and then you buy some put options in case something goes wrong. Maybe Bank of America goes down to $15, but I own these put options right here at the $22 strike price. Spent $205, so if Bank of America goes back down to $15 a share, which is where it was before the election, then I can sell out $22, and that'll save me a lot of money. And it will also lower my dollar cost average. Bank of America pays a dividend, $32 dividend. That's also going to help lower my costs. So you buy those put options, and then you sell call options to help pay for those put options. And when you do this, I say you buy long-term options and you short the short-term options, okay? And then my next position here is GDX. Own 100 shares of GDX. Dollar cost average at around $23 and some change. And gold had a very interesting week. I want to go to the chart real quick and kind of show you what happened. Pull up a 10-day chart here. This is GDX ETF on the gold mining stock companies, so you can see it's a pretty dull stock except for that day. That day was last Wednesday, last week. Today is June the 12th, 2017, and last week, last Wednesday, that was the day before that guy, Comey, I think it was his name, FBI guy, was going to get up and testify about the Russian probes or something. I don't keep up with the whole story. It's like reality television. But it was a nice day for gold, and I think people were kind of running for the hills, not knowing what the heck's going to happen. And then it happened, and nothing big happened. Donald Trump isn't in trouble. He's not getting impeached. So people are like, okay, never mind. Let's get out of gold. And now it's right back down to where it was. So almost like last week didn't happen, might as well not even happen, because it's basically at the same level it was, right? So my position overall has barely changed. I want to go back to my position here. So 100 shares of GDX, dollar cost average about $23, and I use the same strategy. Bought a put option right here, and that put option is at the $23 strike price, so I can sell GDX at $23 a share if something goes wrong. I spent $435 for that contract, so What do? I sell, or I should say, I short call options. And I short call option for the $28 strike price right there. $28 strike price, so that if GDX does go up to $28 or higher, I can automatically sell GDX at $28 a share, and that would be a wonderful profit for me, and that is good until December 15, 2017. GDX stays below. I took in $82 minus commission, so about 70 something dollars, and that helps pay for my put option. And I also did something extra. I shorted a put option, and the put option that I shorted was at the $18 strike price level, so that if GDX does go down to $18, I would end up buying another 100 shares of GDX, but I wouldn't want to do that. So what I would do is I would roll it out. And rolling it out is something you do where if the price of the stock goes above or below the strike price of your contracts, you can roll it out by choosing a longer, and maybe I should actually go on here and give you an example on how that would work. Okay, so let's do that. Okay, December, let's pull up my $18 option here. That's an out of the money. So there's my $18 trading at 36, looks like $35, $36 there. Now let's say that it's, you know, a month or 2 months or 3 months from now, and GDX takes a nose tank and it starts trading down to this level or this, oops, sorry about that, this level or this level, and goes lower. Well, what might happen is that I don't want to get exercise, right? My option, you know, when you sell options, you are an option seller, then the person who bought the option from you can at any time he wants exercise his option to sell you those stocks. So you end up buying 100 shares of stocks from that. I shorted one put option at the $18, and since I don't want to do that, then what I would do is I would roll it out. Okay, so how do you do that? Well, this is December, right? December is in 186 days. That's about 6 months. So what I might do is I might go out to January, or actually make it easier for the video, let's go out to June. And you see how much more money that's worth. I could actually go down to a $16 price. Okay, now let me bring up the one that I own. This is the put option that I own. The $18, why is it doing that? There we go. The $18 put option. You can see the bid is $35.36. So it's going for about $35. Now, rolling it out means if I go out an extra month, I pull up, let's say June, right? That's almost a year from now. Actually, that is a year from now. Almost exactly a year from now. 368 days, 3 days longer, okay? Instead of $35, now those put options are worth 80-something dollars, $90, right? Now, remember, the put option in December was worth, here we go, was worth, oops, didn't mean to do that, was worth $35 and $36, right? So let's close that out and go to the June one here, and you can see that it's gone up. Now, if I wanted to get another option worth $35, I could go all the way down to $16, right? So what I would do is I would roll it out to $16, maybe June, and you see I get more premium. Now, these premiums are going to change, right? If hold on. If GDX did go down below $18, then the price of these premiums would go up a lot, right? So maybe this premium would be worth $200 or $300, but these premiums might be worth $300 or $400. And the key is when you close out your option, you would click on here, and then you would go to actions, and you go buy to close, right? And you put in your one contract, and then you review the order, and you are buying it back. It's just like if you're shorting a stock, you're buying to cover. So that's what I would do. And then, you know, the order would go through, and then I would pick a new option at a long, again, okay, this is December, so I close out that, oh, let me pull it up again, out of the money. Here we go, out of the money. So I would click on that option and put in all of that information, click on the buy, and then I go buy to close, right, and put in all the information and everything. One contract, review the order, and so I'd be spending however much it'd be worth, etc., etc. Order goes filled, and then that option is off my plate. And then I would want to get another option, right? Maybe I would go out to June, And then again, oops, why did it do that? That's my recording device. So I would go out to June and then go out of the money. And then again, I would pick the $16 and I get the same price and I get $2. I would get $2 extra so that GDX could go down another $2, right? So that's called rolling it out. And that's what I would do if the price of GDX actually went below $18, because I am not interested in closing out my short position. That's for me to make some extra income. Okay, so that's that. Going back to my account. So the GDX position hardly even changed. Now, let's look at the Bank of America positions. Now, I should mention something. Let me pull up some of the tech stocks. Amazon. Here, let's take a look at what Amazon has done, and let's look at the chart. Okay, and let's go to the 10-day chart, and you can see what happened here. Amazon was doing really well, and then it took a nose tumble. Okay, now let's look at Apple. Okay, AAPO, Apple, and again, pulling up the chart and drawing my trend lines here. Notice how similar that looks, right? Almost looks like Amazon, doesn't it? Let's pull up another tech stock. How about AMD? Okay, AMD is a chip company. And let's look at AMD. Let's see what they've done. Okay, little different. They had a nice up, but again, they took a nose tank. Okay, so why am I bringing up all these tech stocks here? Because the bank stocks, now let's look at bank stocks, financial stocks. And let's look at my B of A stock here, chart, 10-day chart. Looks nothing like the bank stocks, right? Let's look at another bank stock here. What's another one? How about Wells Fargo? Wells, one thing I like about Ameritrade is, here it is, right there, WFC. One thing I like about Ameritrade is that it automatically searches for stock. And, you know, let's look at Wells Fargo and see what their chart looks like. Again, it looks pretty good, right? Up, up, and away, right? So you could pull up a lot of bank stock, a lot of financial stocks, and those are going up. Tech stocks are going down, right? So there has been a sell-off in the technology industry, and there has been a buying spree in the financial sector. Now, one thing that's coming up is the Federal Reserve is supposed to announce interest rates hikes this week, and I think that's why people are buying financial stocks and people are getting out of tech stocks. They're shifting their money around, right? Of course, those stocks I just showed you, Apple and Amazon and Netflix, I'm sure they dropped as well. I haven't even looked at them, but pretty much most of the tech stocks have been doing a sell-off. But that doesn't mean the companies are bad. It just means that there's something going on. And the something that's going on, I think, has to do with the shifting of money around. But nobody really knows, right? And so that's why, you know, I buy all of these put options and I do all this funny business. So anyways, back to Bank of America position here. My Bank of America, my dollar cost average is $22.90 something. So right now, currently, my Bank of America is at $23.79, giving me an $85 profit right there. So if I wanted to, if I wanted to just sell out of my B of A, I'd make good money right now. Okay, my put options have dropped. I bought those at $203. Those have dropped about $50, but the Bank of America shares have risen $85. And my call options have dropped $10, so you can add that to my 85. So I made $95, lost 50 something dollars, so overall about a 40 something dollar profit per share. So that's about $400, and I am up on B of A. GDX I'm totally flat on, so that's my position overall. Okay, as far as the market itself, this week we are waiting for the Federal Reserve to make their big announcement. And as far as Donald Trump and the testimony stuff and all that, I don't know. I guess you can turn the TV on and watch a nice soap opera or Jerry Springer, and you get the same enjoyment out of that. But the truth is, nobody really knows what the heck is going to happen. But I can tell you that this Trump saga is the biggest market mover that's going on today. So that's why I try to keep up at a little tiny basic level, not getting in overwhelming, not getting in too deep. I don't want to lose myself in all of that Trump drama. Because overall it's just all talk, news, right? Nobody really knows, nobody really knows, nobody really knows. But all in all, I continue to invest, and these are my positions right here. 400 shares of Bank of America, 100 shares of GDX, own put options on all of those, and selling call options, I should say shorting call options to pay for those put options. Nice, safe investment. This is my Roth IRA account. And so that's the weekly stock update for the week. Today is June the 12th, 2017. Thank you for watching, and I will see you again next week, and hopefully we can make some more money here.